Hello traders, it's Victor with you from the Forex Ball Trading Academy, and today I would like to present you the analysis on the dollar versus Swiss franc as we discussed yesterday. So yeah, there is an interesting price setup that we will be going through. But before we get started, I would like to remind you that all the information in this video is for educational purpose only, should not be considered as a financial advice. As you know, we had multiple ideas and analysis on the pairs related to the Swiss franc, which is expected to get weak. This was going back a month ago, and I think this is still the case. For example, we see that dollar Swiss franc continues to range and there is a potential correction to the upside. We had the idea on the Australian versus Swiss franc, on the euro Swiss franc, on the pound Swiss franc, and today we will analyze the dollar Swiss franc, which gives the big picture of the Swiss franc, I think. So yeah, still expected to get weak in relation to other major fiat currencies. And what we have is the double bottom formation at the level of 9055. Price tested it once, then tested it second time, spiked below but failed to close below. Overall price went lower, although what we see is the RCI oscillator is forming a bullish divergence, which does suggest a trend reversal or a corrective move to the upside as we expect. And you can see it on the chart. We have this green arrow pointing to the potential resistance level. And why this could be the case? This is not a trend following analysis, but analysis we will be doing both trend following, counter trend. Only ideas will be focused on the trend following approach. So here is a counter trend, and why this level is interesting now in terms of the buying opportunity. So here what we have is the average price downtrend trend line. You can see there was a first point, then the second point, and we see support, resistance right at this point before there was a last wave to the downside. And we actually used this last wave to the downside to draw a Fibonacci retracement level where you can see 23.6 Fips. The average price downtrend trend line has been rejected here, it acting as the support along with that 23.6. Now let's see on the hourly time frame what happens there. And here is the clean bounce of the 23.6 Fips at 90.96. So rejection was in place, and then price attempted to break below, produced the spike, but then failed to close below the spike. This is a clear bullish sign as I see it. Besides, we can see another bullish divergence on the RCI has formed. So double bullish divergence suggesting that this could have been the bottom and the perfect entry point, especially considering these spikes. So after price would have produced the first spike and failed to close below, that could have been the signal. Besides, the bullish divergence formation is yet another signal. So here is the ideal point of interest for buyers. Moving back to the forward chart. Now, while this is an interesting point of interest for buyers, we need to understand how far price might be getting. And for this reason, I have used 3 different Fibonacci retracement levels. The first one, if I zoom it out, this was applied to this overall correction to the upside, which gives me the retracement level at 88.6%. Now, the second Fibonacci was applied to the last major wave to the downside, and we have 50% Fibonacci retracement. Finally, I have used this corrective wave to the downside where Fips was rejected, and we have 161.8 Fips. There are 3 different Fibonacci retracement levels near 0.9260 price area, and it also corresponds to the exponential moving average. So if it continues going down, probably it will start going flat, and this will be exactly where our resistance level and the moving average will meet. In regards to the downside, if there will be hourly close below this low produced here, I mean the clear close, not just the spike, but the break and close below, price might retest this bottom to produce a triple bottom, and it could be moving along the average price downtrend trend line and hitting this support once again, but only break and close, daily break and close below the low produced here at 90.50 will completely invalidate this bullish outlook, and then only then price might continue to move down. All in all, this is the potential move from this point, which equals to the 150 pips, slightly more. And this is what we're looking for in the coming week. Probably this week there won't be any major moves. I don't think so, but maybe the beginning of the next week we will see the trend unfolding. Okay, let's move back to all the analysis and ideas we did previously as well. Australian Swiss franc is still at the same spot, nothing major happening. So moving on to the Euro Swiss franc. Euro Swiss franc is in green, and I do expect that trend to continue. So here price didn't quite reach the moving average, although it still looks very bullish. Although in the worst case scenario we might go back and retest the moving average before if uptrend will continue. So far looking very, very bullish. Australian versus dollar analysis we did this week. Here price is at the uptrend trend line yet again, maybe spikes below this low, could be consolidation extended, but trend remains very bullish. As we can see, there are no huge signs of a potential trend reversal, so we stick to the plan and wait and see what will happen to this level, Fibonacci level at 88.6 pips. Pound Swiss franc, idea of the yesterday, and here idea worked perfectly. Price produced a spike, it failed to close below the support, Fibonacci support, and today we see this 4-hour candle moving up. So this could be fast rally to the upside on this paired opportunity. Was indeed very interesting because of the extremely good risk to reward ratio. And we are left with the ideas on the trading view. Let's move to them. And this is Australian versus Japanese yen. Idea is in green, so half profit could have been fixed while the price have moved half the way towards the resistance. Here stop loss at the break even to secure the idea, and we're just going risk free with this one. New Zealand Japanese yen, this was analysis rather than idea, and the best price and most interesting price for the buyers would have been this area. Price still holds above the key support area, and today we see this rejection of the uptrend trend line, so maybe this will be the beginning of this uptrend continuation. In the worst case, break below this level will invalidate the bullish outlook, and the Japanese yen could be starting to feel quite strong even against the Australian, but there we already have a stop loss at the break even, risk-free trade. And that's it for today. It looks like all the ideas are going in green. It does look quite positive in the medium to long-term perspective, and we will update you obviously on what's happening in the market tomorrow. Hope you enjoyed it. As usual, guys, smash your like, subscribe, and never forget to ask questions, because when you watch the analysis you don't understand something, you want to clarify this, just drop me a question. I will be happy to answer and assist you. So that's it. We'll see you tomorrow and have a great trading day.